Okay.
Oh my God! You can't have two number ones.
Uh,
Oh, you don't want to. You don't want to. Well, you can delete it off. What? Unmuted now.
muted. That's
I'm
correct.
unmuted. That's all. All right. Are we ready to rock and roll?
We are ready to
Are we?
rock and
Are
roll.
we live? Are we
We
live?
we are live. We are live. Our faces are on the screen.
All right. 4, 3, 2, 1. Hello, everybody.
Hello.
Welcome from wet Vancouver. What's that? Post Taylor Swift first concert.
Vancouver
Yeah.
Swifty edition.
Yeah. Craziness. I was in early this morning. There was a whole bunch of people still around, and I don't
Still?
know if they're Swifties.
Yeah, it's crazy.
Yeah.
Capitalism,
Crazy.
consumism.
Yeah, but it's good. It's
Yeah,
good.
this is
We
good
like
for
money,
the
right?
economy.
Everybody likes money. Yeah.
Money flows.
So, welcome everybody to our
Again. Oh my
Again,
God, I am tired. I am tired of the introductions, and not in a bad way, but like literally tired of introducing
we have some
ourselves.
technical issue frustrations, and I'm a bit of a perfectionist, so I like things, quite right. I don't want to do things that are half-assed. So, that being said, welcome to the Trader's Journey.
Welcome.
My name's Ashley. That young buckaroo's named Isaac. Let's give a little brief explanation of what this is all about. I've been a trader for 16 plus years, and I trade mostly Forex. And we work together in Vancouver inside an international school. We've been chatting a lot over the past few months about the markets and stuff like that. We decided to, hey, why don't we do a podcast? Just kind of take that kind of chit chat, insights and stuff, So Isaac's been trading for how long?
I started this year. And chatting. We mean like I go and ask him questions, and he he knows. I mean, he always answers my questions, so that's good. There's a lot of confusion out there
Yeah.
on the trading.
Notice he didn't say he answers my questions correctly. He just says he answers the questions. So
Most of the times, correctly.
yeah, no. Um, yeah, but you're trading mostly stocks and crypto, right?
Yeah, I started stocks, and just recently, I opened the crypto account.
There you go. Yeah. And actually I'm in Ethereum, actually. Very
Ah,
small
nice.
little thing. Yeah. So, this is a journey, right? And even with Isaac just starting, young guy, right? Me being 16 years, I'm still learning too. I mean, it never ends. If you think that the journey ends, you just get better at it, and you just get, you know, maybe a little bit more understanding and a little bit more. I don't know what's the word. Well, last week was kind of all over the place, right? It wasn't exactly great. I mean, the environment right now is tough for
What do you say?
traders because,
Last week wasn't the greatest
well, no, I mean, depends how you
for what, for the
how you as
the
a
economy
trader. No, in trading
in
itself,
trading.
like making money. Like the last couple of weeks have been kind of all over the place. What I mean is this: it's hard to interpret the market, right?
Yeah.
It's hard because there's so many things going on that people like, just like the economy, just like investors, traders, we all want consistency, right? We want that trend, we want it to go, right? But we've got some things that we have to look at in the world, that are these macroeconomics.
Macroeconomics. Yeah.
Yeah, we're talking about gold, what's happening there. We got Israel conflict, maybe that's coming to an end. We got, well, not coming to an end, but they're coming to a ceasefire, right? Maybe there's something going on there. We got the conflict in Ukraine's just raised the heat. Um, and then we got Trump, who came in a landslide. He's got, you know, policies and what he's going to do. What are they going to be and how are they going to affect people? He's been talking about these tariffs, right? You know, giving tariffs to Mexico, Canada, China. And
Yeah.
how does that going to look? We don't know, right? So we've had some, the Fed's Jerome
The
Powell came out and he's saying, oh, everything's cool, everything's okay, the economy's ticking along.
whenever he speaks, like everyone, the whole market listens to him, right? Like he's the boss.
Yeah, yeah. Well, the US, right? It's the Feds. However they go, everybody goes.
And then
Whether people like it or
I
not.
think he kind of supported crypto, or like I think the words he said, like Bitcoin will become the new gold, something like that, no? Like the electronic gold.
I didn't see that from Jeremy Powell.
Uh-huh.
From is it Jeremy Powell from the US?
Jerome.
Yeah, Jerome Powell. Yeah. I haven't read anything that he says he like, but Trump loves crypto. Trump is a Bitcoin guy, right? So Bitcoin's got quite a resurgence since Trump gone in. And his administration people that he's picking are crypto people. So I think there's going to be a lot of stuff going on there. But crypto's here to stay, whether we get some decent stuff. And, I mean, I still think there's some craziness to it, but that's beside the point. I told somebody I'll trade trees if it makes me money. I don't care what the assets are. But, the fact of the matter is why we're traded. So what is the trader's journey all about? It's basically a journey. It's basically we're mapping out a journey. We're going to meet and we're going to talk about the market, what happened, what we see, what we feel, and we're going to show trades. We're going to show the method of how we trade, and basically we're going to open up to questions. People, I know this. I know that, and Isaac will tell you this. When you're starting and when you're going, and even now, you have questions, and sometimes it's hard to ask those questions because you're embarrassed to ask, or you think you should know, you don't know, you feel stupid. So we want to do this to say, well, look, ask the question. We should, after this recording, we should put in the description, we should have an email, right? That basically you could email a question. Say, hey, I want to hear more about this. I want to hear more about that. And if you don't want to use your name, say, please don't use my name, and we won't use your name. If you want to comment below and say, hey, I want a question about this, I know a lot of times Isaac's question is, well, what levels are you looking at? What are you looking at this level? What are you looking at? Is it support or resistance? Like, and why? Because he wants to trade. He wants to find the optimal place, level to trade from, to trade to, because he wants to make money. I mean, the whole game of this journey is, for some why you have, is to make extra money on the side. That's what it is. And for me, it was retirement, right? I'm a chef by trade. I made decent money, but I always wanted a side gig. And the way I got into Forex, actually, is I used to be an affiliate marketer back in the day, in the 90s, trying to make money through ClickBank. And one of the affiliate programs that were being offered, believe it or not, was Forex trading. And I went, oh shit, wow, I just have to figure if the market's going up or the market's going down. I don't have to recruit anybody, sell anybody, promote anything. Oh, how hard could this be? Little did I know. But yeah, it was good, but it has been a journey, because being a chef, there's a lot of hours, like high-end, hotels, catering. So I would typically be 12, 14 hours a day, 6 days a week. And you don't get time. Time was a tough one. And so, yeah, there is a process. And, I also teach an elective at the school at Introductory to Forex Trading, just the nuts and bolts. And my experience in teaching young people is they want to know very quickly how to get results, right? And I say, well, what is your goal? I want to make money. I want to find a trade to make money. I go, no, you need to understand how the market works to find an opportunity to place a trade to make money. So we're too wrapped up in the idea of making money rather than understanding the process of how that happens. Does that make sense?
Yeah, I have a question. um, for example, because you mentioned it, because we've done this first podcast multiple times already, and now I think I am understanding better how the market works, because you explained it to me many times. Now, how do you know that you know how the market works? How do you know you're ready to jump in and start doing it?
Wow, what a great question. The short answer is you don't know.
I don't know. You just go like when you learn how to swim, you just jump.
No, I don't mean that. What I mean is this: is you never know. Nothing is 100%, right?
Okay.
Nothing is 100%. I'm going to try and explain this in an analogy by using a casino.
Mm-hmm.
Right? We all know what casinos are, right?
Business.
People go, they go there to gamble, right?
Yeah.
Right? You have gamblers in there. So let me ask you this: does a casino lose money that you know of? Has a casino ever gone bankrupt?
I don't think so.
Right. But do they lose money to their clientele sometimes?
Sometimes they allow that. Yeah, I guess.
Well, I like what you're saying. They allow that. Yeah. At some point, they are going to lose money. So why do they win overall?
Because they focus on their plan and their business plan, I guess.
Well, it's not specific. It's looking at it microly. I mean, you have a business plan, but they have rules.
Yeah.
Right, and they have the house rules. It's the house.
Yeah.
So if they're doing blackjack, they have to hit on soft 16. I think that's one on. There's a whole bunch of rules. They can't split aces. They can't do this. They have rules, and they never, ever digress from their rules because they know over the period of time they will win. Now, people will argue, well, people could go in there and count cards and that's illegal, which is crazy. I get it, but it is what it is. So beside the point. The point is that they have their house rules. The dealers follow it, they follow it, and over a period of time, they win. So we as traders have to have rules. We hear the term price action.
Mm-hmm.
Price action is the movement of price over time that creates a pattern.
Mm-hmm.
That pattern could be double tops, triple bottoms, a wedge, head and shoulders, king's crown, all kinds of things, support and resistance.
Mm-hmm.
Right? Don't want to get into too much, but the point is it creates areas of interest for traders to say, oh, I see this situation. And when I see this, the rules are this. And if you follow those rules, you should, over a period of 10 trades, win more than you lose.
Mm.
Right?
Mm-hmm.
Now, as you go through this experience, this process, you will start creating your own formation of rules that makes more sense to you. Typically in terms of risk to reward, typically at how many trades you take, all this kind of stuff, because there are legitimate mistakes new traders make, me included, right? And even though we say, oh, I never do that. Yeah, you do, because the psychology of you as a human, how you're made up, you are set up to make those mistakes. Fear of missing out, you're greedy, you overtrade, patient, blah, blah. We talked about patience a lot, right?
Yeah.
And, patience is, people say to me, well, what's the number one thing? There's many number one things, right? But patience is a big one. You got to be patient. And if you lose, don't get frustrated. A lot of the time, someone makes a trade, they have patience, it doesn't work out, and they get frustrated. Or they see it go against them and they get out and go up, trade the opposite way, which is the wrong thing to do. You have to. I've talked about 3 pillars, right? With you, I have 3 pillars,
Yep.
Principles, whatever you want to call them, right, of trading. The first pillar, the second pillar, the third pillar. So the last 2, number 2, is the macroeconomics and fundamentals of what central banks do, monetary policy, and the economic strength and well-being of a country creates a strength or a weakness of a currency. You match that with another currency of another country, and you're hoping you have matched one that is strong against one that is weak, and you could trade. Right? That's it in a nutshell, right? So we watch these key indicators. You may have a bias of euro strength, but a key indicator comes out fundamentally that shows that, oh, things are not so great economically, like jobs. Oh, that's not good. But that's temporary because you just found that information out. Doesn't mean to say you're going to react crazily. And so over a period of time, and we know this year has been all about inflation numbers, right? Everybody's reading inflation, what's going to happen with the interest rates and all this kind of stuff, right? And that was the focus. Now the focus has gone to jobs, right? Because we want to stimulate the economy. The economy in the US is booming. It's just going nuts, which in one way is a little scary because you need a little traction, right? But it just seems to just be going gangbusters. So the whole idea is to understand those drivers that move the market, right? I mean, we look at S&P 500, but the S&P 500, 48% of the S&P 500 is controlled by the Magnificent Seven, right? However they go. So it's like sometimes, you look at overall, but, if you look at the S&P 500 and you say, well, it's going well, and, then you look at 2 or 3 of the Magnificent Seven, which are doing bad, maybe it's not going to do as well. But you have the other pillar is the technical charts, the price action. And remember, the price action is created by traders. Now, what do you mean? Not traders like you and me, banks, mutual funds, big guys, right? Banks will create the price action to their advantage if they need to, because they have the ability to do that. We don't, right? So they will set up something. They will set up a price going up, they push price down, and they push it up again, and then they push it down and go, oh, double top, we got to sell. They push it down a little and they push it up again. All right, because they want it at a higher price to sell it as a higher price. So they need traders to be able to do that. So they can manipulate price because they have the ability to do it. So the point is that price action was developed to help traders like us. You go to any education standard. Okay, we're going to teach you support and resistance. We're going to teach you moving averages. We're going to teach you trend lines. We're going to teach you all that shit, right? But when you have that kind of stuff with aligning with the fundamentals, it's a lot stronger.
Mm-hmm.
So what's the other pillar, right? There's the
Pillar
pillars.
1 is the macroeconomics fundamentals. Pillar 2 is the technical analysis, and pillar 3.
The most important pillar is you, the individual, the trader themselves, is how they go about their business. And what do I mean by that?
Your rules?
Yeah, not necessarily rules, because if you're just starting, you don't really have any rules because you don't know how to trade.
Yeah, I don't have any rules. Yeah. I'm making some rules now.
Yeah, you're developing them as you go along, right? But it's how you approach the process. How do you approach the journey, right? Are you documenting your journey? Are you come and say, oh, I noticed this and I noticed this. You're starting to say stuff like that, and you're starting to look at that, and you're starting to use that in your next analysis. So you're starting to develop those rules, right, over a period of time, right? But we have Isaac was really hot on Lululemon. We just call it the Lululemon, right? Well, I don't know what we call it, but the Lululemon watch or something, I don't know. And he was very kind of into this Lululemon trade. And he had a good analysis about what happened. He went and researched it. He went and did his work. He didn't just blindly trade it. And this is a good sign. This is a good sign that over time he will become a very proficient trader because he put in the work. You can't expect to wake up on a Wednesday morning, wherever you live, and get up, have breakfast, then go to your computer and open a 15-minute chart and say, I'm going to place a trade. That's ludicrous. It's a ludicrous way. Even on an hour chart, 4-hour chart, daily chart, you have to have some kind of bias of understanding of what's going on in the market. You can't just, I'm not saying you're not going to win. You may get lucky. But over a period of time, you will lose, right? So you have to understand, am I in an uptrend? What's currently happening? Am I having a retracement of the uptrend, which means the current trading environment is down, not up.
I don't know if I asked you this before, but do you consider yourself as a day trader?
No, because a day trader will open up the beginning of the trading day and then close at the end of the trading day. I don't do that.
No. But have you had periods of times that you trade daily?
Are you talking about specifically during the sessions?
Yes.
We're on the Pacific coast, so when we have Euro opening and London opening, we're asleep. Well, I am.
Well, what I mean is because I've seen on internet, people and they tag themselves as day traders, and what I understand by that is that they do trades every day. Like it is the full time. Now it has become their full time job, and it's like they do trading every day. Do you do or have you done trading every day?
Okay, so just to understand, so your synopsis of saying a day trader is that you trade every day.
That's what I understand.
Okay. Well, I don't think that's it, but
No?
that's okay. Doesn't really matter what I think. This is what you think.
Okay.
So here's look at it. So you're saying, okay, Ashley, I want you to be a day trader. So you expect me to get up in the morning and start trading all day, right? And you want me to enter trades, get out of trades, enter trades, and at
Not.
the end of the day,
Mm-hmm.
you want me to stop trading. However, let's think about that. So we're in the Pacific Coast, which means our day starts at what, 7 a.m. in the morning, Pacific time? 7 a.m. Pacific time, right, is what time out east?
9.
Or 10, right? With
Uh,
3 hours, aren't they
3.
3 hours? Right.
Okay.
So their trading day starts earlier than ours, right?
Yeah.
So 8 o'clock is 5 a.m. our time.
Yeah.
So we would have to get up at 5 a.m. And if we're trading to the night, do we use the Euro session or London session? What is the most busiest trading session? Do you know? Is
Uh,
it London, Euro, or New York?
I would say New York.
No, it's not. It's London.
Okay, that's what I said.
But
London.
there you go. London, Euro, but New York has action. I'm not saying it doesn't, but there's seems to be, and I haven't really checked it lately, but the point is that you have Asian session, which is quiet, Australia, Sydney, which is quiet, because the other markets are closed. So let's get back to this day trading stuff, right? So you get up in the morning at 7 a.m. on the West Coast where we are, and we've missed 3 hours of the day and actual trading, right? And remember for us, right, out east closes, 5 o'clock, right, and then opens up 8 a.m. on the New York session. But for us, it's 2 p.m. But it doesn't actually close, but that's when that session ends. So it's very difficult in my mind where I turn around and say, okay, a guy gets up and he's going to trade let's say he trades the New York session. So he gets up at 5 a.m. So I'm going to say to you, start getting up at 4:30 a.m. and you're going to start trading, have breakfast and check the charts, check everything and start trading. That's a job.
I mean, I get your point, but I also understand that you don't necessarily need to. To my understanding, a day trader doesn't necessarily need to start at the start of the market, at the market open. As long as because you're doing it daily, you can place trades in the middle of the day, no? Or would that really affect? Like, does that really affect that you're not starting on the market open? Can you just make
Well,
few
I think for
trades?
us, for us, if we're in the West Coast, it's going to affect us, right? If we're in the East Coast, it's not going to affect us. But I used you as the example. So, 8 o'clock our time is where the London session closes, right? So you got the end of the London and Frankfurt and New York opens. You got another hour of trading with the other areas, and we're not up yet. So we get up, and we've got all that going on. That's going to be a lot of action because you've got two markets that are about to close, and you've got one that's just open. Right? Now that sets up the rest of the New York session. So let's just talk about specific trading. That you want to be a day trader, right? That means, you're specifically talking about restricting yourself to trade from a certain time to a certain time, right? And it's like, okay, you could do that, but you're just creating a job for yourself. This is supposed to be, for me, it's a side gig. It's something that I do. But because I'm in the West Coast, I do a lot of pending buys and sells, right? And I look at the market and I go, where do I want to be? Where do I want to be? Where do I want price to be before I make a decision to do anything? So I wanted to come down to this level. So I put an alarm on that level that's going to send me a message through my SM text or email, and it's going to send me an alert. Price has hit this level. Doesn't mean to say I'm jumping into the market right away. It's just told me it's hit that level.
Mm-hmm.
So now I go, oh, okay, it's hit that level. I'm going to look at it now. I'm going to say, oh, okay, great, great. Okay, now what do I want it to do? What is happening? What other stuff has gone on? And I make, maybe it's an Australian thing. Has any news come out of Australia? Is something coming out? What's going on? And I make a determination. Yeah, you know what? I want to buy this now. Just say it was selling, right? Going down. Now, why do I want to buy it? What do I want to happen if I'm happy to buy it? What's going to confirm that this is a buy? Well, I want some momentum to the upside. So I want it to take out a certain high, another level, right? So I mark that off. I go, okay, give me another notation and alert when I've hit that level.
Mm-hmm.
Now, I look at the 4 hour chart. Once that's done on a weekly, daily 4 hour, and it's hit that second level, that could take 4 or 8 hours, 12 hours. So I haven't been sitting at my computer trying to figure out what I'm going to do
Mm.
all day. All I've got is these alerts going on. And I've picked maybe 3 or 4 currency pairs during the weekend. On Saturday, Sunday, I do my analysis of the week. And what am I going to look at? What is my bias? Am I looking for strength here and weakness there? Why? I lose all these economic datas. What's going on? Okay, I think the yen is strong.
Mm-hmm.
So the Aussie is weak, so I'm going to sell the yen against the Aussie. So then I look for my levels and I set it up. So now throughout the week as I'm working and as I'm going along, I get these alerts. Ding, 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 alert. Okay. Now adjust another alert. Oh, now it's done it. Okay. Now I need to look for something in particular. I get that, and then I place my pending buy. I place my stop. I place my target. Done.
Mm-hmm.
And then I go about my business. Then the management comes into effect. Am I in the trade? Oh, I didn't get in the trade yet. I haven't been in. Okay, I'll wait. See if I get in. And then if I'm in it and it's going good, so okay, now I have to manage it, right? And I do certain things that I want to look for to either get out of the market or look for an opportunity to add to my position. So
So,
I haven't actually sat there all day and just traded that day.
mm,
That could be now it started Monday and now it's Wednesday and I'm in the trade now and it's Thursday. So it hasn't been I don't do lower time frames. I don't go and I'm not saying you can't because you can find these levels on a higher time frame, which I teach a lot of people to do because they don't have jobs. They're trading full time. So it's
mm-hmm.
like, okay, so you find a level on a weekly chart, a daily chart, and go down to the 15-minute or the 1 hour and trade it from there, trade it up to that level. That's what they do. And they look at price action and they look at certain things to get them to there. And that's how they trade. Now, it's not in a particular day. It could be 2 or 3 days. Uh, there's scalping where you're in and out of the market in like an hour, 50 like on a 15-minute chart, 5 minute chart. I would never trade it.
No.
It's too crazy. No, I've never met, and I've met a lot. I've never met a trader that just scalps for 15, 20 pips and is successful financially. They may have oh, I'm gonna do some scalping, but I've never known a pure scalper that is successful.
Mm.
It's always, in my opinion and my experience, the profitable traders are position traders, swing traders, which is what I am. And
Swing.
I've met a couple of investment traders that actually are in. Wow, one of my old students is an investor trader. She, finds the level and puts in swing trades, position trades, and then long-term trades. and she trades big money now. And she's able to find a currency pair. And the last one that I know of was the JPY. She made a lot of money because the yen was so weak, and she got in early. Swing trades, position trades, multiple.
Hmm.
So you can do that. And again, it's creating the environment that works for you. However, the foundation of trading works for any type of environment.
Hmm.
And I'm talking about what is the foundational principle of trading?
What is it?
Buying and selling.
Buying and selling.
So what's the first principle of buying?
Buy cheap, buy low.
So buy low, right? Sell high. So, if you look at these things like this, it doesn't change whatever way you trade.
Yeah.
So if you're looking to sell, you're looking for a low. You're looking to buy, you're looking for highs. You want higher highs or lower lows.
Hmm.
So you need to kind of look at these principles.
Hmm.
Say, here, I have these principles, but I'm taking this principle to this period, this time frame, whatever.
Hmm.
It's the same. It's not different.
Mm.
So it's the way I look at it.
Now,
The market doesn't move up in a straight line.
no, yeah. Um, I we mentioned on the previous one about the funded account, and I'm looking to open the funded account. I haven't done it yet, but I think it's gonna be nice to open it and also share here the progress of the trader's journey. But I never ask you this question. What platform do I use to? Because I have my Wealth Simple app. That's what I use to trade stocks and crypto, but it's not really meant for trading. And they say that it's like this is more for investors. Not they don't recommend trading the short term. Um, what platform do you recommend?
Yeah. Well, the platform that the funded accounts use are MT5. That's the platform that's used.
What is it?
So
Empty?
MT5, but you don't have to worry about it because if you sign up and you join their program, they will provide you with the link to access that platform.
Okay.
So you don't have to worry about it. Now, I trade off of the MT5 or MT4s with one of my brokers, but I typically use a charting software for my analysis. And I use Smart Trader, which has the tools that I like. A lot of people use TradingView. TradingView is a very popular
I use
charting
TradingView.
software. Yeah, I use Smart Trader because I think it's better than TradingView because I trade Fibonacci's.
Mm-hmm.
And I have a certain way of trading Fibonacci's that is different. They show it differently on TradingView. So there is a way that you can use it. You just reverse it. But I'm not going to talk about. I mean, I can if people want to know. I'll show it. But I use Smart Trader, and I can connect my broker
Mm-hmm.
to Smart Trader. So if I want to trade off that charting software to go to my broker, I just have to click a button switch, and it trades on my live account.
Yeah. Oh, so you link
So
the
yeah,
smart
so
trader.
yeah. So if I'm just doing my Smart Trader as an analysis and using the demo account, I just leave it as the demo account.
Mm-hmm.
If I want to place the trade, they say, "Where do you want it?" And I want it here. Then they place it in that account. So I like that, and I don't really use MT5 or MT4. I don't do much analysis. I draw trend lines,
Mm-hmm.
levels, but I mostly like because they have everything I need. I look at indexes, I look at a lot of stuff, and just go through that process. My process that I look for levels to trade from,
Mm-hmm.
to levels to trade to. So that's what I do, and I like using Fibonacci because Fibonacci has levels of mathematical levels of support and resistance, and I basically it monitors the swings because I trade the swings,
Mm-hmm.
and so I use Fibonacci. So when you have the funded account, they're set up. They'll set you up with the platform that you trade on, and
Mm-hmm.
it'll be in this particular case will be MT5.
MT5. Okay.
Uh,
I will check
and
how to use it.
and that's one of the things that we're going to do here is we're going to show trades. We're going to
Mm-hmm.
say this is what I traded and this is what I was looking at, and I use this reference on the last one. We're going to show the good, the bad, and the ugly. I actually had the good, the bad, the ugly, and the really shitty. Because sometimes we do stupid stuff, right? And I think it's more of like, it's great. I can show you lots of winning trades. I can show you lots of stuff going on, but I want to be very transparent and show the bad as well. But I was on another educated platform. I'm not going to say the name here. I don't want them to come back at me. So I was teaching, and I basically kept talking about. We have other traders there, and a lot of the narrative out there for traders to new traders is let the trade play out. So you place your position, you place your entry, you place your stop, and you place your target,
Mm-hmm.
and they let it go. Now you're done, walk away. It's either going to win or it's going to lose. Well, I think that's the most stupidest thing I've ever heard, and I tell people that. They
Yeah.
go, "What the fuck are you doing?" Yeah. Well, okay. Let's look at it from this point of view.
It sounded good to me when you said it like that.
It sounds what?
It sounded good to me. Like you put the money, you set up your target, you set up your stop loss,
Okay.
and what was the other thing? That's it, no? You set up your
Well,
entry. You set up
you
your
then
entry. Yeah, you entry.
Huh?
Then your price target or your stop loss. So it's either hits which one hits first, either the stop loss or the target. No, that's how I see it. It is like if I'm confident, I know it's gonna get to the price target.
No, it's not about confidence.
I mean, if you're
You've
confident
already
with your
yeah,
analysis,
but
no.
okay. So that right there, that
Mm-hmm.
thinking right there means you're going to win 100% of your trades. That means you're going to win all your trades, right? Because your confidence is there.
I mean, not
Not going to happen.
necessarily. No, of course not.
That's
But
not going to happen. That's what I'm saying. So let's be real.
yeah.
We know, and we could do a trade exactly the same, and it doesn't work out.
Mm-hmm.
And then a week later, we do exactly the same, and it works out.
Mm-hmm.
Because that's the environment of trading. Sometimes the market will do what the fuck it wants. And if you've got some big boy bank deciding that they want to push down price, even though there's, stuff there that's telling us it's going to do that, well, this time we lost. So let me explain, if I may. You have now placed this trade,
Mm-hmm.
right? And the trade's chugging along. It's in, and you're making some money, right? And then day one, the day comes to an end, and it's a new day. Maybe you're up 50 pips, 100 pips, whatever it is, doesn't matter, right? And you say, oh, I'll just let it go, doesn't matter, right? Some people will lock in profit, which removes risk off the table, which is a good idea, which means they move their stop loss. I am a very big advocate of that. Take away your risk. The biggest thing you need to do is control your risk. If you can control risk, it don't matter what strategy, what you do, how you trade. If you focus on minimizing risk, you're going to be successful. That is the key.
Moving your stop loss would mean moving it to the profit.
Well, not necessarily. You could turn around and hit your entry price, which is a break even, which means you don't make. If it comes back, you don't lose any money, but you don't make any money. But let's say, for example, you're up 50 pips. You say, wow, I'm up 50 pips. So I'm going to move my stop loss just above my entry, that if it comes back, at least I've made 20 pips.
Mm-hmm.
So it's not a total loss, right?
Is this the way you do it? Like the way you price?
This is called managing your trade. Now I'll explain. When you made the decision on that trade, let's say it was Monday evening at 4 p.m., right?
Mm-hmm.
Everything was there, and you entered on a 1-hour chart, right? When you go to bed and then you get up in the morning, 12 hours have gone by, or whatever, how many hours. So you've had 12 new candles inside there. There's been some movement and there's been some time. Because when you go to bed, trading doesn't stop for everybody. Everybody says, oh, well, hold on, Isaac's in a trade. We're not going to do anything while he's asleep. We're going to wait because he's entered a trade. We want to make sure that he hits his target or he hits his stop loss. They don't. Life goes on while you're asleep. And somebody can come out with a piece of news that sends that market to your stop loss. You don't know, right?
Yeah.
It could also go good, and all of a sudden news stalls. The environment that you place that trade has changed. Here's the example. In the summertime, where we are in Canada, right? In the summertime, we expect it to be what? Sunny.
Nice.
Nice weather.
Yeah.
Hot.
Yeah.
Want to go to the beach, right?
Yeah.
Okay. So what if you get up one day and you planned on Sunday to go to the beach? It's nice and hot that day. You know, I'm going to go to the beach tomorrow. And you wake up and you look out and it's pouring down with rain.
Oh no.
Are you going to go to the beach?
I don't think so.
Does that mean summer is over?
No.
No. Well, you could wait indoors and say, well, we'll wait for the rain to stop.
Mm-hmm.
Maybe the rain only takes 2 hours or 3 hours. And then when the rain stops and the sun comes out and the clouds go away, will you go to the beach?
Yeah, I would.
Yeah, more than likely, right? But what if it keeps raining? Oh, well, doesn't mean summer is over, but it's just not ready for you to go to the beach yet.
Mm-hmm.
And you'll have to wait till Wednesday. Well, it's the same thing with trading, right? So the environment's not ready. It's changed. So let's say you're in a trade, right? And the trade's gone on for a day, 2, 3 days, and all of a sudden news comes out and this market now starts to retrace back, right? Well, where's it going? Do you know where it's going? No. Well, you may have a level of support that you've marked off. So, well, it's probably going there. Probably. You don't know. It could keep going. Because while it's going down, something else might happen. Now you've just been up 100 pips, and maybe you're trading, $10. That's $1,000, and it's starting to go down. So your $1,000 is now 800, is now 600, is now 300, is now 100, is now negative 50, is now negative 100, negative 200. You see where I'm going here? Right? Well, why would you do that? You know it's coming down. It's if the market breaks a trend line and breaks a low, tests that low and still goes down, it's going down now. So why the hell would you stay in it? Get out, take your money, put it in your pocket, go while I wait for another opportunity to get back in, to get to that target. It's not the right timing right now to get to that target.
What right? Is the safe stop loss percentage? I think you told me once the 3%. Is that
risk? That's risk.
Okay, that's risk, but it's like a part of your rules that you have your 3% risk.
All right, you want me to go over that?
If you want.
Okay. Let me finish this. Let me finish this. What I'm talking about.
Sure.
Here's another analogy for everybody.
Yeah.
About managing trades. Don't let it be. The name of your game is to grow your account and to make money, right? And forget all about this. Oh, you're going to do. When I look for a trade, I look for a risk of 1 to a reward of 3. Doesn't mean to say I'm going to get it, right? Now, I can show you a list of trades. I made 10 trades, 12 trades on a month. Yeah, 1 month, and I lost 7 trades. I broke even in 1 trade and made a little bit out of 1 trade. That means I had 3 trades that went to target and made money. Yet with all my losses and all that, I still made money overall. And I lost 7 trades. So even with my losses and my 3 wins, I think so it was 3, I made money, but I lost more than I won because my risk is controlled. Now let's go to risk. Okay. Where you put your stop loss is what you're willing to risk on that trade. Now, I am a very big risk management guy. So I have what I call controlled risk. So if you have an amount of money in an account, let's say it's $5,000 for argument's sake, right? So I am going to say I will not risk any more than 3% for the week on trading.
If you have how much? Sorry again.
5,000, whatever you have.
Okay. Whatever you have,
right? So let's say it's $5,000. So what's 3% of $5,000? Are you getting out your calculator?
No, I just received a text message.
Oh, are you sure about that?
Yeah, it's 150.
Fucking believable. You could do that in your head.
3% is an odd number. Sorry.
1% and times that by 3. If it's that difficult. Anyway, okay. It's $150, correct?
Confirmed.
That's all you're risking. That's all you're risking that week is $150.
Mm-hmm.
Now you're going, well, that's not a lot of money. No, that's the point. So where do I trade it? Well, if you find your right trades and not just keep going through day by day, set it up, say, oh, I like the Great British Pound being strong. Oh, I like NVIDIA. I like Lululemon. I like these trades, right? So I'm only going to, it's a little different with stocks, but I'm more looking at gold and oil, and, NASDAQ, and these things that move, currencies. So once you do your analysis and you figured out, I got 5 trades I'm looking at, 5, right?
Mm-hmm.
So I got $150. Now remember, I have to wait till they set up. Now what if 2 have set up?
Mm-hmm.
Now I got my $150 and it's now Tuesday. The other 3 are not really setting up, but 2 have set up.
Mm-hmm.
So I'm going to say, okay, I'm going to take $100 of that 150 and I'm going to split it between these 2 trades.
Mm-hmm.
So what position size do I use? Well, I got $100, right? So
$100 that you're willing to lose, right?
Yes. So do I split it? Well, whatever. You make a decision. Okay, I'm going to do $50 and $50. So now let's say you have determined your stop loss and you've determined your target. Let's say we're trading the Great British Pound against the JPY. And you're buying it. And you found your stop loss where you want your stop loss. And that's another thing. Everyone is different. I want to put my stop loss there.
Mm-hmm.
So how far away is it from your entry? Let's say, for argument's sake, it's 50 pips.
Mm-hmm.
Okay? So I actually have a software I created. I think I showed it to you on an Excel spreadsheet or a Google spreadsheet.
Yeah, I saw it. Very complex.
You can put in the currency, right? So you put in Great British Pound JPY, you put in your total amount of your account, and then you put in your stop loss, and it will tell you exactly how much your position size will be to match that stop loss to only risk $50.
Uh-huh.
Make sense?
Not really.
Control risk.
Okay, so the Excel tells you how much. So you put on the Excel how much you want to lose, how much you're willing to lose, $50.
Yes. Yeah.
And then what else?
Well, you put your stop loss, your entry, your stop loss, right? How far away is your stop loss, right? And it's going to calculate for you what the position size would be.
Oh, okay, yeah.
To lose that $50, right?
And for example, what would be a number, like, I don't know, an average number for that $50 to lose if you were trading that currency? I don't know. I don't know about numbers on the Forex. That's why I don't know
what we could do next week. We'll set this up and we'll go through an example for everybody.
That would be great.
It's a little hard to do it now because I don't have it on the computer. But the point is this. Yeah. The point is this. It sets you up that you're only going to lose that amount of money on that trade. Mm-hmm. You've already set up your risk. You can't. That's it. Mm-hmm. But here's the beauty of it. That's one trade. And the second trade. you're not going to lose. Doesn't matter if you make 5 trades, 2 trades, 1 trade, 10 trades, however many trades, you're only going to lose $150 that week.
Mm-hmm.
That's it, which is 3%
Mm-hmm.
of your account. And that's what you should. Now, what's the reward factor? Well, the reward factor for the week for me is 10%.
Mm-hmm.
That means on a $5,000 account, what is 10%?
500.
So if you hit $500 at any time during that week, you stop trading.
Is this
If you hit 3%, if you lose $150 on Tuesday, you don't trade for the rest of the week. Right? If you're in trades and you've entered 3 trades and you've moved your stop loss, you've managed everything, and then Thursday morning you come in there and you're up $570. You go, oh shit, this is awesome. Move all your stop losses, move everything that you've locked in $500, right?
Mm-hmm.
And then whatever goes until Friday, the end of the week, is gravy. If it comes back and stops you out, it doesn't matter. You know you're guaranteed to make 500. Make sense? That's trading. That's smart, safe, smart trading.
Sounds,
and are you going to have trades that are not going to work out too? Yes. Are you going to have trades that you're going to miss? Yes. But think about this. Let's say you do this every week for a year. And let's say you hit that 10% target. Let's say you only hit it once a month, right? But you have an average of 6%, 8%, and then you hit maybe the 3% twice. So you lose $300. Do the math.
You still.
We did this. I did this with one of my groups, and we opened a $1,000 account. And we did the 310 rule. And we traded exactly how I said, right? Did exactly the same. We all decided what trades we were going to do. And I executed the trades. That first week, we only did 3%. But then next week, I think we lost 1%. As time grew on and they got more confident and understood what we were trying to achieve, we started to grow.
Mm-hmm.
On month 4, that $1,000 account was at around just over 3,800, and all we were doing was increase. Now, I will admit, third week or 4th week, we hit 26%, and it was the only big home. We did hit another 8. We hit 18% in another month. So if you do it right, you will have those grand slam moments, right? That's a baseball reference if anybody doesn't know, right? We don't go for the grand slam. We go for the base hits. But twice within that 3 months, it was actually nearly 4 months. It wasn't nearly 4 months, not 3 months. But we went for it, but we actually had grand slam opportunities twice. And the beauty of it is this, is that we're just so cool and relaxed.
Mm-hmm.
No freaking out. And also, I forgot to add that at the end of the month, we would add an extra 10% onto the account too. So every month we would have $100, another $100, another $100. This is how you build your account.
That sounds like a great plan. Yeah.
And there's another, growing your account and how you enter. So I have a lot of these methods of how to, do these things, SOPs, whatever you want to call them, right? Because the goal is, I want to make money. Like a lot of the times we want to make money, but we want to make a lot. How many times have I said to you, man, get out? You know that's hit that high. You know that's going to be maximum. Take your money, wait for it drops back down, and buy again. Now you're starting to be a believer of that, right? Because I think you worked out that if you'd have done what I said or what I mentioned, if you'd have exercised that on Lululemon, you would have made $500 3 times over.
Yeah.
And what did you end up making at the end?
300.
300 for 5 months, but you could have made 500 three times over the 5-month period.
Yep, that's right.
That's 1,500. So without banging my drum, which method is better?
The other, not mine for sure, but I didn't
Right.
know.
So why don't you never heard of it? Because it's not conventional,
It's
right? You heard this from me, right? That's not what people tell you to do. They go, no, no. And you're on a platform, well, simple, that teaches you as an investor for the long time, right? So they're saying, well, this is what you should do. This is, investing
the
over a period of
traditional,
time.
yeah.
Yeah. So look, I'm 64 years old, and I know we're in a time of things are different, right? You got to think differently, because no one's gonna. Well, I followed the plan. Oh well, I did this. I do this exercise with my students. I'm going to give this an exercise for you, right? Friday, we know the market closes, right? So I'm going to ask you this question. So you've placed a trade. It's been going most of the week, and you're at the end of the week. And you have a choice. You can either close out your trade or leave it over the weekend and wait until Monday to see what's happened. And it's Thursday, 20 minutes before the close of the market, and you're up $6. Your target is still where it's supposed to be, but you're up $6. So I'm going to ask you, are you going to take your $6 or are you going to leave it in there over the weekend? What are you going to do? And there's no right or wrong answer.
I think it depends.
Well, make a depending decision. What is your decision?
If if I'm very confident on my analysis that it will move to where I know, I don't think $6 is a lot of risk, and I'm aiming to get my price target, and I'm confident the price action will behave how I think it will behave, so I'll just leave it.
So the answer to the question is you are closing it or leaving it?
I'll leave it.
Okay, that was a really long-winded answer to the question. All right, so you're going to leave it at $6.
Yes.
Right, okay. Without diatribe, I want a quick answer, a yes or a no, on the next question. So the same trade, right? Not $6, $60. Are you going to close it or are you going to keep it?
I'll keep it.
Okay, so you're going to keep it over the weekend at $6 and over the weekend at $60. Okay, same question,
600.
same quick answer. $600.
I lock
Are
in.
you going to? What was that?
I lock in the profit.
What does that mean?
I
Lock
take
in
the profit, yeah.
So you're going to close your trade. All right. Now, can anybody understand what happened? It's exactly the same trade. Exactly. There's one difference on the three trades. What is the difference?
Me and my money.
No, position size.
Position size, yeah. The amount.
Right? Your amount that you've entered at risk in the position size, $6 versus $60 versus $600. But you as a human have put value on $600 to better your life. $6 barely buys you a coffee at Starbucks. $60 can't buy you a pair of runners. I've tried, right? So not worth it. But $600 can make a significant difference for you in the weekend to go out and enjoy yourself. Yes or no?
Yes.
Right? Now, what if it's 6,000? That's even a more life-changing scenario. Do you understand the psychology of the trading scenario here?
Yeah.
It's not the, I'm 100% confident. It's what matters to you in the value of what you've received.
Yeah.
$6 versus $600. You don't value 6, you don't value 60, but you value 600. Does that make sense?
Makes sense. Yes.
So that's the humanization of the psychology that you think. Look, again, guys, I'm not denying it. It happens to everybody. The fact of the matter is this: when you understand and how you think, right, you will be a better trader. You will say to yourself, that's important to me. You know how many times I've had people come to me and they say, I'm up like, $2,000 and, should I take the money? should I let it go? And I go, well, weekend's coming, right? You got news next week. You're coming back. You're up $2,000, man. That's a good chunk of change, isn't it? Why would you ask me?
Mm-hmm.
If you take that money, that's in your genes now. That's in your account. You can't lose it.
Mm-hmm.
But what happens if you don't take it? That 2,000 could end up being 1,200. Still good money. Could end up, don't throw your money away.
Yeah.
You cannot go broke if you take your money out of the trade. Think about that. You can't go broke by taking your money.
Mm-hmm.
Doesn't matter. Don't tell me about risk to rewards. Who gives a shit about risk to reward when the trades are over? When the trade's over, there is no risk.
Mm-hmm.
And there's no reward because you've closed the trade.
Mm-hmm.
So people said, well, what's your record?
Mm-hmm.
What do you mean? Well, your risk to reward ratio. Oh, who cares? Do you really care? Do you really care if I say, I get 1 for 5? What does that mean? I risk $1 and I make 5. Does that make me a great trader? Not necessarily, right? What matters, nobody looks at that at the end of the day. You know what they look at? What do you got in your account? When did you start? I started with 50,000. What have I got now? I got 275,000. Oh, wow. Are they looking at, did I do a 1 to 3 or a 1 to 5 or a risk to? No. What they're looking at is the end result.
Yeah.
Right? It's just like a soccer game, a hockey game. It don't matter how you score. You get off your ass, your head, your elbow. Well, can't handball it, but you get what I mean, right? Well, you can handball it if you're Diego Maradona, right? And call it the act of God, right? Yes, I'm still bitter. Yes.
All right.
So, point is that manage your trades,
Risk
get your money,
and risk management.
control your risk. Yeah.
Well,
On that
Very-
note, we
yeah.
should probably call it today.
yeah, it's been
This is-
1 hour. Very good. Now I feel like there's a lot more to learn now. I think we never got into the risk management, but it's very, very important.
Yeah, risk management is very important. Now, housekeeping. Let's look. Whoever's listening to this, if you have questions, and we're going to put an email down there for you to email if you want. Make a comment down there. Ask questions. The whole thing of this is to help you with your journey, right? And if we can help you, if I don't know the answer, I can give you resources. We can point you in the right direction. If you don't like my answer, say so. It's okay. We can discuss it. It's not, I'm not saying mine is the best out there, but it works for me, right? But at the end of the day, you are a unique individual, right? And what's going to work for you is how you need to do it. And hopefully that makes sense, right? But I'm going to show you the foundations, fundamentals of what you need to look at. Anyway, on that note, thanks,
All right.
everybody.
Thanks.
You guys have a great week. We'll talk to you next week.
Thanks,
Take care,
Ashley.
guys. Thanks, Isaac. Talk to you later.